This is Brant from TradeGuild.blogspot.com, and it is September 19th, 2006. Um, we are waiting for the Fed meeting tomorrow. The market's been pretty much in a holding pattern this week, waiting for that. There's no expectation for a hike in rates, so the Fed futures are actually down from 22% to 6%, pricing in a 6% likelihood of a rate hike for the rest of the year. So they don't really think there's going to be any more rate hikes, as the attention is now shifting towards the weaker economy. The housing start numbers came in today pretty weak. And historically, September for the market in general is the weakest month out of the year, and we've done pretty well so far. So there's a saying in the markets that you should sell Rosh Hashanah and buy Yom Kippur. So that period really extends from September 22nd to October 2nd. So we'll see if there's going to be any weakness through the end of the month. Also, the week after triple witching, which just occurred on Friday, historically has quite a bit of downside bias associated with that. I have the SPY up right now, and we're going to use this basically just to as a proxy for the market. And what I'm looking at in the SPY here is what I think is a little bit of short-term weakness as it approaches this May top up here. It looks overbought. It looks ready for a break. Last night I posted on the blog, I thought the market looked kind of tired. So a couple things that are developing here, though. Let's just draw in some trend lines, and these are going to be kind of rough approximations. Let me just fix that one. And here's a trend line on the bottom. And what is kind of developing here is a tightening in that trading range. That is reminiscent of a rising wedge pattern. I'm not sure that this is one of those, but it does have some of the hallmarks of it, the diminishing volume throughout here. But in any case, that would not be a good sign if that were to be what we were looking at there. One of the other things that's kind of jumping out is this big volume on the down days. That's usually indicative of distribution. One of the other things we're looking at too in MACD is this divergence that's developed here. Let me clear up the screen. I'll give you a closer look at that. You can see MACD has been making lower highs, and it's actually at a very low point right now. So those MACD divergences are pretty powerful. So I think it's pretty likely that we're going to see a downturn here from this point. Let's take a look at an hourly chart. Oh, here we go. Here's an hourly chart. And one of the things I see that is kind of jumping out to me is this little area up here that was acting as support. We've just barely penetrated it now, but you can see there was a lot of selling over here. This could just be traders closing out their position for the day, associated with that volume. So I think it's likely that we're going to see some more weakness in the spiders here. If we take a look at the Bollinger Bands, you can see up here we've had a close outside. So, that's also indicative of an overbought condition as well. This is a shorter time frame for MACD, and you can see we have a divergence there too. And one last thing I want to show you is TSV here is divergent. It has not confirmed this higher high in price over here. This should be higher. So it hasn't confirmed that. Money Stream has been in gear, but there's a relative divergence between price at this level and price at this level in the spider. You can see Money Stream is way down here, whereas it was way back up there. So basically we have price that's even, and Money Stream is on a downward slope. So I've been saying that I expected the May highs to be taken out, but that there was considerable divergences on a relative basis in a lot of the indicators. Let's move on at this point, and let's take a look at STEC, which is a stock that I've been conversing with one of the readers through email, and he was wondering back here in mid-August if he should get rid of it. I said no, hold on to it. But it does look like there's a reversal brewing here. That's a Harami reversal. You get this big up candle here, and then the doji, or the star, that falls in the body of that. So it doesn't mean that this is a short, that this is going way down or anything, but it does mean that it's likely that it is going to at least pull back at this point. So you might consider taking some profits there. One of the other warning signs that's kind of evident on this chart is the divergence that has taken place here in MACD. So taking those things into consideration, I think maybe taking a little bit of money off the table at this point is not entirely a bad idea. One of the other stocks that has been on the long list here and has a really nice run is CAPA, and same story here. There's that Harami reversal, and again a divergence here in MACD. So let's move on to LAVA, and this has been on the blog since mid-August, so we've had a really nice run in LAVA. One of the things that I would consider is, with this big spike up here, is you want to start looking at your stock to protect those profits in that stock. So one way we can do it is with a 22-day moving average on an hourly basis. That's the red right here. So maybe this 890 level, as this moves up, that will lock in your profits. One of the other things, if you have telechart, I use my trend channel, and I'm going to just go ahead and put that on an hourly, and you can see that the bottom level has not been breached on a close throughout this whole entire move. So right now that's up at about 910, and that will continue to move up. So if you have telechart and you're in LAVA, you might consider that. Real quick, let's take a look at flow. This is a short that quite a few people are in. Let's take a look at the volume on an hourly chart here. Did I get that right? No, I didn't. 5-minute chart. Here we go. There's that volume. Big spike into the close. One of the other things that I'm looking at is money stream on a 5-minute chart as well. And corresponding with that spike in the close, look at what money stream is doing right now. It's in a big leading divergence here. So it's interesting that we've been in flow. It's been kind of frustrating waiting for that to break down, but there are some signs of weakness here, so maybe we're going to see something develop in the next couple days. Rio is another short that I'm in, a lot of people are in, and today we got an engulfing pattern right here. We had the one candle, and this just completely swallowed it. It's not at a level that would normally be associated with an engulfing pattern, but it's just kind of something interesting as we wait for this big head and shoulders top to break down. Let's see if there's something else I wanted to show you here. On a 15-minute chart, here we go. There is a level of resistance up here around 2070, so we'll see if Rio is turned back at that level and maybe heads down from here. I have a bunch of shorts on the list, steel and gold and everything, and I'm not going to go through them all and list them all, but the primary theme is head and shoulders tops or big triangle tops with a break on big volume and rally up. So I want to just show you AA, and this is kind of the ideal setup, and this is what we're looking for. So go look at all those shorts, and here's an ideal setup. We have the break on big volume on that neckline down here, and a rally up to resistance, and this is where we want to short it. So you can kind of make your own trades. Just go ahead and look at those videos from the weekend and what I posted last night. A lot of these head and shoulder tops, big symmetrical triangle tops, and they've all broken down on big volume. And this is a perfect example, rallying back into resistance, and that's where you want to short it. That's going to do it for this video. I will be back tomorrow with another video, and best of luck.